Now, with the inauguration of the new ministers and their portfolios, there is a renewed mandate for the exploration of other forms of revenue generation for the diversification of Nigeria's economy base. Now, this is the portfolio reaching you from NTA News 24 in the nation's capital, Abuja. Glad to have you join us. I'm Chimobi Walter Naji. Now, this week, we will take an appraisal of the impact of the currency swap agreement signed between the Central Bank of Nigeria and the People's Bank of China 1 year after its implementation. But first, here is Comfort Amodo with the business news.
Thank you, Chimobi, and welcome to the news segment. Now, a fiscal policy committee is in the offing for Nigeria to manage the nation's finances just the way the monetary policy committee has over time been pivotal to the management of the nation's currency. Minister of Finance, Budget and National Planning, Zainab Ahmed, announced this as part of measures to boost efficiency in the nation's economic management and meeting with the Minister of State for Budget and National Planning and officials of the ministry in Abuja. Part of the steps to be taken by government include liquidity management to make maximum use of the Treasury Single Account (TSA) that has stood out as a commendable finance management strategy that will soon be expanded to cover foreign transactions.
GI that we launched in January 2019, the Strategic Revenue Growth Initiative, has a suite of initiatives that are designed at improving our revenue performance. And we designed those initiatives and assigned them to portfolio agencies. So each revenue agency has specific initiatives that they are to be implemented. And we have targets that are to be measured. But broadly, what we hope to be able to achieve is to move the revenue performance from 55% that we attained in 2018 to 85% in the next 3 to 4 years.
Also mentioned to them about the commitment of Mr. President in the delivery of the 2020 budget to the National Assembly by the end of September. And they have assured me that they are all committed to ensuring that we meet with this target.
Meanwhile, the Central Bank of Nigeria has set a new limit for banks and other financial institutions on non-performing loans to reflect in their books. The Apex Bank disclosed this in its exposure draft and stipulated guidelines to microfinance banks, deposit money banks, mortgage refinance companies, finance companies, and development finance companies as well. The guideline states that the maximum ratio of non-performing loans to total gross loans for mortgage refinance corporations should not exceed 10% of such other level as may be prescribed by the CBN from time to time, and provisions for credit such as the general provision of 2% of the outstanding balance of performing facilities or as may be advised by the CBN. And in the meantime, the value-added tax data by the National Bureau of Statistics indicate that 311.94 billion naira was generated as VAT in the second quarter of 2019 compared to the 289.04 billion naira generated in the first quarter of 2019. This is a 7.92% increase quarter on quarter. Manufacturing generated the highest amount of VAT with 34.43 billion naira generated, and closely followed by professional services and commercial as well as trading services, while mining generated the least. And that's the news segment. Thank you for watching. I'm Comfort Amodu. Stay tuned for more on the portfolio with Chimobi.
Thank you and welcome back. Let's now kick the ball rolling. There are indications that there has been, relative stability across all the dimensions of the currency swap agreement, especially in the area of liquidity, exchange rate, demand management and projections to the terminal date. Now, the agreement, which marked 1 year of implementation last month, was signed on April 27th, 2018 to ease demand pressure on the country's supply of foreign exchange, especially since China is one of the country's largest trading partners. So today on the portfolio, I have with me in the studios to analyze the impact of the swap agreement on the nation's economy. I have an economist, Mr. Simon Samson Galadima. Glad to have you on the portfolio today.
Thank you.
All right, so looking at the constant interventions using the Chinese Yuan by the Central Bank of Nigeria to the FX window to stabilize the currency market, the foreign currency market. How can you assess the implementation so far?
I think the implementation generally has been okay. They signed the agreement and they have been trying to implement the letters of the agreement. The regulations were brought out and banks were expected to open renminbi denominated accounts, either offshore or onshore in China, and then give the information to the CBN so that Yuan or renminbi, the Chinese currency, can be provided for those people that want to do business with China, particularly for those people that want to import agricultural goods or manufactures from China.
Yeah. So how has this impacted businesses and those who are intending to do business with China?
I think it has removed the third currency fluctuation. Before the currency agreement was signed, the currency swap agreement was signed, a business person would have to change the naira to the dollar before changing it to the yuan. Now you do it directly. You don't go through the dollar again. You change your naira directly to the yuan. So that has reduced the currency risks, particularly fluctuations in the dollar.
Can you take us through the trade relations between the two countries and how this has actually helped, looking at the fact that China is one of the largest trading partners Nigeria has in the past decade? How has this currency swap enhanced that agreement?
China is one of the largest trading partners to Nigeria. We import 20% of our imports is from China. Unfortunately, only 5% of what we export goes to China. And this agreement has made it easy for people that want to import from China, particularly machinery and raw materials from China. One of the headwinds of the agreement, the CBN was not too happy because we have next to nothing to export to China. That's actually a limiting factor for us. It's actually a big problem for us, and we need to do something serious about it. The agreement says that we are going to give 720 billion naira in exchange for 15 or 16 billion yuan over the course of 3 years. And after those 3 years, the two parties will sit down. I mean, the Central Bank of Nigeria and People's Bank of China will sit down and see if it's something they would like to extend or not.
Yeah, that's quite interesting to note. But I'd like us to look at this agreement before the implementation of that particular currency swap. There was a lot of stories and hearsays that were going around at the time as to how this would impact directly the local economy in Nigeria. Nigeria, basically, we know, is more or less an importing economy. Yeah, so how has this really impacted on the local economy, those who are trading in the streets?
There was so much hype. Nigerians, particularly people with a particular political bent, felt this would be a saving grace. I don't think so. I feel this is a temporary solution. This is a short-term solution to a long-term problem. Our dependence on oil is a serious albatross around our neck, and the government needs to make changes to the economy. We need to shift away from the primary sector to secondary sector and tertiary sector. We depend so much on imports from countries like China, and Chinese actually are very efficient in what they produce, and we cannot compete with them. So we need to make our products competitive. We need to be very efficient. We need to provide power. For the people on the street, I think the prices of Chinese goods are likely going to come down. The prices will likely come down because it will cost less now to buy a unit of yuan than what would have actually happened without this agreement.
That is exactly the crux of my question. The prices of Chinese goods coming down.
Yes, they are likely going to come down.
But 1 year after its implementation, we've not really seen, for instance, the electronics that people import, infrastructures, services, for instance. We've not seen much of an impact directly.
No. The difference is not going to be much. Besides, it's too early to jump to conclusion about the impact of this policy. The margin is not much, maybe a margin of 2, 3, 4, 5 naira per yuan. So it's not going to be that much. You don't expect the prices of Chinese goods to just plunge. No, that's not going to happen. Definitely not.
Okay, so again, there's been this argument that the swap, costs stability, in the exchange rate between the naira and the yuan. What do you think? Recently, naira seems to be gaining more grounds.
The gains are actually very marginal. The naira to the dollar has been hovering officially around 300 naira, and that was the way it was when this agreement was signed a year ago, and it's still around within the same region now. For the yuan, the difference, maybe it was like 50 something, then maybe 51, 52, 53. Now it comes down to as low as 46. So the gain, as far as the dollar is concerned, is really small. But in terms of the yuan, is a little bit more.
Okay, so
it's a little bit more.
Yeah, this marriage, has it actually boosted the capacity of our local industries?
I don't think so. I think China is notorious for its unfair trading policies. I think this agreement is likely going to favor China, unfortunately more than my country, Nigeria, because they are going to export more of their goods now because it's going to cost the Nigerian less to import. So we're likely going to import some more. And it's going to cost us a little bit more to export. So it's not going to be very easy for us to do that.
So what needs to be done? Because it is quite important that Nigeria begins to gain from such an agreement. What needs to be done, to boost Nigeria's stake on that?
Yes, I think that's very important. I remember when they first went to China pertaining to this agreement, this currency swap agreement, the president spoke and he said China shouldn't see Nigeria only as a consuming nation. They should see us also as an investment destination. I think if that will encourage the Chinese to invest, if it will encourage capital flows from China to Nigeria, I think that will make a little bit more sense than just importing and exporting our primary products.
Don't we have secondary products, like you did say, secondary product that we can actually
we hardly, our manufacturing base is actually weak. It's very weak. We hardly can produce what we need, let alone exporting. And China can export at competitive prices that we cannot export to them. Our prices will be so exorbitant for them, and they will not likely ask for our manufacturers.
All right. Well, has this also addressed, the challenge of dollar demand by exporters?
I think it's going to help. It's actually a step in the right direction, but it's not going to make so much as a dent on the dollar. We import our imports, like the last statistic I checked, we import like 13 billion worth of goods from China, while we export only around $1 billion worth. So the disparity is much. The relationship is highly lopsided in favor of China. Our balance of trade is very unfavorable. Our balance of trade, which is very important for an economy, is nothing to write home about. So I think even for what we import from China alone, this agreement is not going to cover much, let alone our imports from other countries. So it's highly limiting. I think is cosmetic, if you ask me. It's really short term. It's just looking at the immediate term. It's not looking at the long haul. It's not looking at the long term. Unfortunately so.
Looking at the duration of this agreement, that's 3 years for implementation and review, obviously. Do you see this as enough time to be able to fuse in the kind of trade relations we expect to see between Nigeria and China?
I think the agreement will actually bring Nigeria and China closer. It will strengthen our bilateral ties, and it will likely boost investment from China, and it's going to help those people that need, let's say, machinery from China to manufacture things to boost the industrial base. But besides this, I think we need to do a little bit more. China is well ahead. We are far behind. We need to look at the long term. We need to look at how to diversify the economy away from the primary sector. People are looking at the long term. They're looking at big data. They're looking at artificial intelligence. They're looking at alternative energy sources. We need to look at all these things. These are what will actually save our economy, not bilateral currency swaps. They are good, but we need to go beyond things like that.
Has this also affected Nigeria's current foreign reserves?
Yes, it has actually reduced our dependence on the dollar.
Good.
I think the last CBN governor initiated it, and this governor is working on it, so that we have like 7 to 10% of our reserves in Yuan. It's not only done by Nigeria, even the IMF basket of currencies, they have introduced the Yuan. Even the ECB has done that. So it's not a new thing. It's something that a lot of banks are doing, central banks are doing, and I think it's good if we too can do that, so that the monopoly of the dollar can be a little bit reduced.
All right, so looking at the successes, recorded with this agreement so far, a lot of African countries, neighboring African countries, are also, the central banks are also yearning to have such agreements with China. How do you see this affecting Nigeria if it pulls through in the face of the Continental Free Trade Agreement also that Nigeria is part of? If other countries are also having such agreements with China, will this in any way affect Nigeria in terms of trade between Nigeria and other African countries?
I think the impact is not going to be much. The African Free Trade Agreement is a welcome development, though unfortunately we seem to be afraid of competition even from our African neighbors, which is unfortunately so. We are supposed to be the giant. We're not supposed to be scared of Lilliputians, sorry to use such a word, or people that are really tiny, that's what I mean. But in the past, we didn't need the yuan or the dollar to change to, let's say, franc, the West African currency, or to the rand. You could change directly. So I don't think this will have any serious impact, because you don't need the yuan to import from an African country.
All right. Unfortunately, this is where we'll have to wrap it up on the discussion. But many thanks for joining us on the show today.
All right,
it's really been a pleasure to have you.
Thank you for having me.
Yes, I've been speaking with Mr. Simon Samson Galadima. He's an economic analyst. And Bosede Abel is standing by to give us a breakdown of how the market fared last week. Over to you now, Bosede.
You're welcome to the market segment of the program. In the week under review, the NSE All-Share Index and market capitalization appreciated by 3.07% and 3.25% to close at 27,800.17 and 13.5 trillion naira. All other indices finished higher with the exception of NSE Insurance Index, which depreciated by 1.38%, while the NSE ASM closed flat. A total turnover of 2.3 billion shares worth 19.7 billion naira in 18,379 deals were traded by investors on the floor of the exchange. The financial services industry led the activity chart with 1.8 billion shares valued at 10.4 billion naira traded in 10,701 deals. It was followed by the conglomerate industry with 197.8 million shares worth 286.2 million naira in 1,066 deals, while the third place was occupied by the industrial goods industry with a turnover of 100.3 million shares worth 2.1 billion naira in 788 deals. Sovereign Trust Insurance PLC, Transnational Corporation of Nigeria PLC, and Zenith Bank PLC jointly accounted for 1.2 billion shares worth 3.3 billion naira in 2,907 deals to emerge the top three equities. A total of 3,943 units of exchange-traded products, ETPs, valued at 1.6 million naira were traded in 7 deals, with 1,673 units of federal government bonds, valued at 1.6 million naira, also traded in 31 deals. 40 equities appreciated in price during the week. 25 equities depreciated in price, while 101 equities remained unchanged. Next is the global scene. The global market last week saw most markets fluctuate as investors anxiously waited for the speech of the Federal Reserve Chairman Jerome Powell on Friday, where he said the U.S. Central Bank will act as appropriate to sustain the current economic expansion, which is the longest in the history of that nation. However, it wasn't clearly stated if another rate cut was imminent in September. Markets were sent tumbling last Friday after President Trump ordered U.S. firms to start looking for an alternative to China, with the Dow Jones Industrial Average losing 623.34 points. Those declines wiped out the weekly gains the average had built through Thursday's close and after Friday's session. The Dow ended down 1% for the week. The S&P 500 slipped by 1.4% and Nasdaq Composite also lost 1.8%. Futures had indicated declines after the weekend saw an escalation of the trade war. Trump tweeted Friday after the market closed that the U.S. will raise tariffs on $250 billion worth of Chinese goods to 30% from 25%. Tariffs on another $300 billion in Chinese products will also go up to 15% from 10%. The levies on the $250 billion worth of goods are scheduled to kick in October 1, while the duties on the $300 billion are set to go into effect in 2 stages on September 1 and December 15th. Major Asian indices fell more than 2% on Friday. Beijing unveiled new tariffs last Friday on $75 billion of U.S. goods. Amid the market turmoil, the off-share Chinese yuan fell to a record low against the dollar. China and the U.S. have been engaged in the trade war since last year. The economic conflict has dampened economic and corporate earnings growth expectations as investors and companies weigh its impact on the global economy. The U.S. and China are the world's largest economies. That's the much we have for you on the week under review. The rest of the program continues with Chimobi. I am Boss Sede Abel.
Welcome back. I do hope you had a profitable time with us today. But remember to join the conversation through our social media handles showing right there on your screen. Until next week, I remain Chimobi Walter Najib. Do have yourself a wonderful week.